Treasury Inflation-Protected Securities, TIPS, are U.S. government bonds designed to protect investors from inflation. Here's how to use TIPS in your investment strategy. Understand TIPS. Inflation protection. TIPS are indexed to inflation, meaning their principal value adjusts with the Consumer Price Index, CPI. As inflation rises, the principal value increases, providing a hedge against inflation. Interest payments. TIPS pay interest semi-annually at a fixed rate. However, since the interest is applied to the adjusted principal, the actual interest payments increase with inflation. Diversify your portfolio. Risk management. Incorporate TIPS to diversify your fixed income portfolio. TIPS offer a unique benefit by providing protection against inflation, which traditional bonds do not. Complement other investments. Use TIPS alongside regular Treasury bonds, corporate bonds, and equities to balance your portfolio and reduce overall risk. Evaluate market conditions. Inflation expectations. TIPS are particularly beneficial during periods of rising inflation. Monitor economic indicators and inflation forecasts to decide when to allocate more to TIPS. Deflation considerations. In deflationary periods, the principal value of TIPS will decrease. Although they are still backed by the U.S. government and will not fall below the original principal value, consider this risk in your investment strategy. Determine investment horizon. Long-term investment. TIPS are best suited for long-term investors looking to preserve purchasing power. They are available in 5, 10, and 30-year maturities, making them suitable for long-term financial goals. Retirement planning. Use TIPS as part of your retirement portfolio to ensure your savings keep up with inflation, maintaining your purchasing power in retirement. Tax considerations. Taxable income. The inflation adjustments to the principal are taxed as income, even though you don't receive the adjusted principal until maturity. Plan for these tax implications when investing in TIPS. Tax-advantaged accounts. Consider holding TIPS in tax-advantaged accounts like IRAs or 401(k)s to defer taxes on the inflation adjustments and interest payments. Purchase TIPS. Direct purchase. Buy TIPS directly from the U.S. Treasury through Treasury Direct during auction periods. This method avoids brokerage fees. Secondary market. Purchase TIPS from the secondary market through a brokerage account. This option provides flexibility to buy and sell TIPS outside auction periods. TIPS mutual funds and ETFs. Invest in TIPS through mutual funds or exchange-traded funds, ETFs, for diversified exposure to a portfolio of TIPS managed by professionals. Monitor inflation and portfolio performance. Regular review. Regularly review your TIPS holdings in the context of your overall portfolio. Adjust allocations based on changes in inflation expectations and market conditions. Reinvestment strategy. Consider reinvesting interest payments and inflation adjustments to maximize the compounding effect over time. Align with financial goals. Wealth preservation. Use TIPS to preserve wealth by protecting your investments from the eroding effects of inflation, ensuring long-term financial stability. Income stability. Include TIPS in your income-focused portfolio to provide a stable and inflation-adjusted income stream, particularly important for retirees. Stay informed. Economic indicators. Stay informed about economic trends, inflation reports, and Federal Reserve policies that impact inflation and interest rates. Professional advice. Consult with a financial advisor to integrate TIPS effectively into your investment strategy, considering your risk tolerance, financial goals, and market conditions. By strategically using TIPS, you can safeguard your investments against inflation, ensure stable income, and enhance the resilience of your portfolio against economic fluctuations.